Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rook with Dan Basse of Ag Resource Company on a down day and everything but the cattle market. And Dan, let's start off talking about corn. We saw some losses there as a result of these quarterly stocks numbers. USDA found over 200 million more bushels that we added onto the ending stocks.
Yeah, kind of a disappointing day finding an extra 207 million bushels. That takes corn stocks up to 1.532 billion bushels. Cash markets were telling us we didn't have any shortages, mind you, but I didn't think that we'd find this much supply. This is the third largest miss on a stocks report on a bear side that we can find in history. So again, a surprise. We're adding to the pile. If I include what I would say the USDA's estimate for production in September, we end up at about 18.3 billion bushels of corn. We're going to have to find homes for all of that, and that's going to be tough as we go forward.
Well, like you said, with the way the basis was acting, the spreads were acting, it shouldn't have been a surprise. But where do you think those extra bushels actually came from?
Well, the USDA doesn't usually go back and adjust crop sizes. We all in the industry argued that the January report last year was incorrect as farmers didn't correct seed moisture levels to what USDA or NASS would traditionally use, 15.5%. So maybe we'll have the same problem this year. But as we think about it, we thought that the crop was probably understated. And I think that's what came forward. Feed residual fell to, 5.45 and change a billion bushels. That's down sharply. The big question that I have is now USDA probably needs to adjust its new crop feed residual estimate downwards. It's sitting way up there at 6.1 billion. I'm thinking the total needs to be something like 5.8 or 5.9. So not only do we get the bump, the cut, if you will, in terms of demand for old crop feed residual, I think it's also going to carry forward in the new crop accordingly.
Okay, so let's talk about what happens in the October WASDE when you plug these numbers in. How much does yield have to fall to even get us below 2 billion bushels on ending stocks now?
Yeah, if you look at USDA's 2.1 billion and you look at maybe the adjustments that need to be made, we'd have to see the U.S. corn yield go from 186.7 all the way down under 181 bushels an acre if you really wanted to keep ending stocks below 2 billion bushels. So it's a heavy lift. And accordingly, if we look back at the August, September, and now this report, the USDA weathered through extra acres at 3.5 million that we found combined in both August and September, along with what the 200 million bushels we found in stocks. I need nearly 10 bushel an acre cutoff yield nationally if I'm going to get that corn end stocks to even be closely remote to under 2 billion bushels and get this market going. So it's a big pile. That extra acres and extra now stocks is added a bunch of supply. Like I said, 850 million bushels.
Does this suggest that corn prices have to go below $4?
I fear they may have to. I really believe, Michelle, that the job of the corn market is still to encourage additional demand. I believe as we get into the end of harvest and we start having issues with storage availability, that corn may have to slip down into that $3.90 to $4 level. It is not inconceivable with the additionality in sorghum and potentially wheat that the corn market has not scored its seasonal lows yet. That may happen as we head during the month of November and go into first notice day. So a lot will depend here how strong export demand stays. And if USDA is closed and not open, that doesn't help the bulls because we need to be fed.
And quarterly stocks were actually a little bit friendly for soybeans, but it really doesn't matter here with China out of the market, does it?
No, it doesn't. I mean, we found our stocks down about 13 or 14 million bushels relative to what the USDA indicated back in September. It's a nice, modest amount, but China, as we get into the month of October, seasonally is importing somewhere between, let's talk about 40 to 70 million bushels of U.S. soybeans per week. And so we are not going to have China this year during October, maybe not November. And so that demand is being lost. So the soybean market fell, even though the stocks data on face value looked a little supportive.
That's right. So Argentina, how many cargoes of beans did they end up selling to China last week? And did that take them all the way through November now in terms of their buying needs? Are they booked for that long?
Yeah, we count somewhere in the vicinity of 44 to 46 cargoes of soybeans sold to China. That'd be about 2.7 or 2.8 million metric tons. We think there may be a few days left in November, and then they're working on December, both out of Brazil and Argentina. Surprisingly, both countries still have soybeans available. They just keep whittling away at our window. And if the Brazilian new crop supply gets harvested in late December, early January, our window's down to about 30 or 40 days. So not a big opportunity for the United States. And I hope that the administration still pushes on a trade deal, but I'm thinking it more about new crop than old crop as it sits today.
Yeah, how much more of all grains does Argentina have left to sell?
We believe that Argentina still has something about 4.7 or 4.6 billion dollars. That's 11 to 12 million metric tons. But in that wagon, I'm throwing, wheat and corn and soy meal, soybean oil and soybeans. And so it's collectively all of that. But the Argentinian exporter is aggressive, looking for demand. We believe they actually did move or sell last week $7 billion of goods. And that's really going to, of course, disrupt our market in the world market for another month or two. As we get into the end of November, I think the Argentinian sales prospects will wane. But again, they still need, due to these registrations, to get stuff sold and on the books and get ready to go.
Will China have enough soybeans from Argentina or other sources and through reserves to get through without any U.S. soybeans, do you think?
It is possible. It is not inconceivable. And I think that's something we all need to consider, that should the trade war be unresolved, that China could make it to the end. That's why I said I'm thinking more about next year's U.S. soybean crop, not this year's. But, the Chinese, again, stocks estimates are always difficult to come by. But the New York Times reported there are over 40 million metric tons. My private sources put it between 34 and 38 million tons. Either way, the Chinese have enough reserve stocks to probably negotiate through the South American harvest. So that would take them into, let's say, the June, July period. So something that we need to think about in the background.
And no China deal till 26, maybe?
It could be a ways off. I don't know how these trade deals work, but I do know this, that they're difficult to negotiate on the sidelines of APEC. So even though Trump had said he's heading to the APEC meeting to meet President Xi in the end of October, the Chinese have not indicated that to be the case, nor have the Chinese indicated that Trump has a state welcome in early 2026. So I know the president indicated that that was a result of a talk of about 10 weeks ago. I'd like to see confirmation from the Chinese side before I feel good about the prospects of maybe President Trump heading to Beijing, and that we can get our arms around some kind of trade deal. I do believe at a high level it'll take Trump and Xi meeting to get the big issues worked out, then letting their minions kind of work through other trade details as they go forward.
We just barely held $10 on November soybeans. Do we hold it for much longer here, especially as we have this harvest pressure coming at us?
Yeah, we've got 80% of the harvest left to chew through, and the yield data is getting a little better as we go west and north. My thought process is that beans may have to drop down to 980 or 960 before we find some kind of seasonal low. So I still think there's downside risk. I hate to say that when beans are testing $10, but that's what the fundamentals, and as an economist, that's what the data suggests to me.
And wheat lower, we got the double whammy there of both higher production and higher stocks, right?
Yeah, no, we've got both barrels coming at us on the supply side on wheat. The wheat crop went up 58 million bushels to 1927. We had more stocks than expected, 2120, 2.12 billion bushels. So both on the demand side and of course the stock side, it did not look good. So we'll see how it all comes forward. There's a lot of residual in the first wheat stocks estimate that comes forward, but nonetheless, I think the job of the wheat market is pretty clear here. It needs to find prices that keep strong U.S. export demand, or we need to find it as a feed grain. And that seems to be what wheat is going after. Today in Western Kansas, the price of hard red winter wheat to the feedlot is below the price of corn. So wheat is trying to work itself into the feed ration, particularly in the plains.
So how much lower do you have to go to stimulate that demand?
Well, I don't know. I'm thinking another 10 or 20 cents. It's not a lot, but as we get below 490 a bushel relative to spot Chicago, it would say the next support's 470 in the charts. And without USDA, I think the charts have some meaning here. So I don't know what's going to cause the funds to come out of their short. That's what I ask myself. We are sitting at a sizable net short fund position, and Ben right, but there's also a lot of carry in the wheat market, so they can roll forward and keep making money unless I can provide them with a fundamental spark to get them to change their views of bearish to bullish.
And they're short in all of these grain markets. So how much farther do they push that in sum total?
Well, they've indicated in the last couple of weeks they're still willing to engage in new shorts. With seasonality at this time of the year is not the case. A year ago, they were on the buy side of corn and soybeans. This year, not so much. But, I really need like a problem in South American weather or a spark of trade or something to get some nervousness around these fund traders so that they come out of their shorts. Today, they're still aggressively selling. And I think in the case of corn, they may move back to a position of like, 200,000 contracts or 250 net short before they would feel somewhat uncomfortable.
And we have a government shutdown looming. Will it happen? And what impact could it have on even USDA's ability to give us an October WASDE report?
Yeah, I'm afraid to say midnight seems very close here. I would imagine we will shut down the government. It doesn't appear like Republicans and Democrats are moving a lot closer. I think there's some discussions ongoing in a last-ditch effort. But let's say we close down. I think if we only close down for a few days, NASS or USDA could get back on its feet relatively fast, maybe have the October crop report, though it would be delayed for a couple of days. If this goes longer than a week or 10 days, then I think NASS will probably pivot and say, well, I'm going to leave it to you private guys to get the crops, at least for October. I'm going to switch my attention and talk about November. So we may see that crop report go to November, but I think it's all based in the duration of how long the government closes down.
And we got a pretty good pop in cattle futures here today, especially the feeders. Was that just some end of the month, end of the quarter type short covering?
It appears to be that way, but we're watching the beef market. We've been holding our breath, hoping that the beef market, after a $50 break, is getting close to a bottom. Packer kill margins are just $14 ahead today. That's the smallest for the month of September, looking backwards to 2014. So there are some fundamentals that would suggest that maybe we're getting close to a seasonal low. But I think the cattle market, looking at end of month and maybe thinking about new dollars being put to work, the one thing that is still bullish longer term is going to be cattle and beef prices. It's just all about timing and trying to figure out where the seasonal low comes in.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.